All right, guys. Good morning. Good morning. It is Tuesday, September 10th. Let's get ready. Couple things happened. Nvidia's up a little bit today. Apple had their conference, and it was kind of a big range, but neutral sideways reaction. The Nasdaq is actually, let me make sure. Yeah, so the Nasdaq is actually slightly down on the day, but mostly flat. Yeah, it's GameStop earnings day, so we do have GameStop earnings dropping later. Be ready. Yeah, I don't see anything about that. Somebody's saying bankruptcy. I don't see anything about it. I think that's like there's been rumors of BOK bankruptcy, but there's been rumors that there's been rumors of this for years. If you look it up, right? If you look it up, there's always rumors of it. Usually it's not true, just to put it into perspective. But maybe it is this time. I don't know. But usually it's not true. All right, we're going to do a poll today. Again, GameStop. GameStop has earnings today. So that's a big thing that you want to watch today, too. What's up, Steve? I really love your stream, man, but darn, I wait on you more than I wait on my wife. Bro. I was like 2 minutes late, dude. Are you really only going to pop out when I'm slightly late and then try to troll? Come on now. Don't be like that, dude. It's okay. Yeah, I mean, my stream was scheduled for definitely top 3 latest YouTubers in the world right now. My stream was scheduled for 7:20 market time. I started it at like 7:22, maybe 7:23. Point is, it was less than 5 minutes, guys. Come on now. I get it, people just want to complain, but like, it's all right. CPI, yeah, tomorrow. Who's Georgia? I restarted my modem, dude, but I don't know if it's helping. Like, I gotta refresh things. Yeah, honestly, the poll's kind of acting wonky. Is it tonight? I thought it might have been yesterday. Yeah. Dude, it's not allowing anybody to vote, which is weird on the poll. Like, the poll is at 000 votes. Do you guys see results on the poll? Help me out here. Yeah, he's joking about the poll, I think, Pawn. Let me do a speed check. Honestly, bro, I pay for like 1,000 up and 1,000 down. Lately, I've gotten like 100 up, 100 down. I'm kind of disappointed about it. I reset my modem. Let's see where it's at. Yeah, it's still at 100, dude. And I got a direct Ethernet connection. Why? Oh, well. Yeah, I'm going to end the poll. The poll's kind of wonky. I'm going to end it. And now the music's going out of 2 ears. What the heck is going on? Dude, this is weird. Okay, this is super strange. So like my AirPods, I'm going to turn this off. My AirPods, okay, like the drums are in one end and the music's in the other end, right? And like each instrument is coming out of a different ear. It's strange. There we go. Now it's back. And again, I did a speed test. We're at 100 up, 100 down, which is not bad. It's good. Our ping is 3. So our internet's good enough to justify the stream. But man, dude, I don't know what's going on with... The way I can always check to see what it is I can look at my phone speed. I ended the poll. Oh, now I can see it. Yeah, it's 52. Here, I'll do another one. Yeah, Cat 6 would be better. The way I can always check is I can always just do a speed test on my phone and see what that's looking like. It's probably because we got so many Wi-Fi routers at my house. You know. So let me do a speed test on my phone and see what that's looking like. Yeah, download the app. I don't want to download the app. Yeah, my phone's running at 600 megabits per second, right? So this has to do with something on my end. I mean, we still got 100 up, 100 down. It's still good enough. But yeah, not as good as it should be. Point is, it's not my internet. It has something to do with the connection I've got. Anyways, GameStop earnings today, guys. GameStop earnings. What are y'all's predictions? I don't think they're doing an earnings call, but GameStop is gapping up a little bit today and had a nice little run yesterday up to $25 a share. For GameStop. Kind of crazy. We'll see if it continues. Yeah, I don't know what it is. Yeah, but look at GameStop. I'm looking up the news on GameStop. Yeah, so I don't think GameStop's doing an earnings call anymore, man. They haven't done an earnings call in how long? It's been like over a year, I think, since GameStop's done an actual earnings call. I remember distinctly when they stopped doing it, because whenever they stopped doing earnings call for GameStop, they had the earnings report, and the earnings report dropped after the closing bell at 4 o'clock. And so I streamed it. We had like thousands of people there watching. We had like a couple thousand people getting ready to watch GameStop earnings. And then they announced that they weren't doing an actual earnings call, which consequently made the stock drop, made people freak out, and then they haven't done one since. AMC only had 1,200 volume. Well, I mean, you got to understand, people probably aren't day trading it. No, I see just in extended hours, AMC had one big bulk sell order of 500,000 shares. And this was at 3:57 p.m. yesterday, or 4:57 p.m. So in after hours yesterday. This morning, I see... Yeah, I don't see much volume this morning. But yesterday, it did have some orders coming through. It had at least 500K showing up yesterday at almost 5 o'clock. Market time, that is. Yeah, what's going on over there, Pawn? Yeah, that's correct, Sam. Yeah, I just don't feel like going through the walls, bro. It would take so long to go through the walls. My wife wants to do it because she's a big believer in like. My wife is actually super health conscious, man. Like she doesn't let me drink out of plastic. She doesn't like Wi-Fi signals. Like she's very health conscious about everything, right? We eat only organic foods, you know, we try to eat well. We don't eat fast food. She doesn't like me drinking out of plastic, you know, like, so she's a good wife in that regard. Like she's looking out for us. But for me, it's a little overboard sometimes, but she tries, you know, she tries to look out for us, which is good. I appreciate it. You know, I appreciate it. Anyways, GameStop up there to 2470s. Oracle had earnings yesterday. Yep, that's true. Oracle did have earnings yesterday, and they are up a huge amount. If you look at Oracle here in the middle chart, Oracle gap it up from 140s all the way to 150s. So a very big percentage gap up here. Very big percentage gap up. Not quite 10%, but yeah, not quite 10%, but a big gap up here. Yeah, definitely top 3 wives. One of my top 3 wives of all time ever in the world. You know, definitely one of my top 3. If I had to like put together like a list of my top wives, she would definitely be in the top 3. You know, SPY heading back. Yeah, so the SPY right now, Oracle gapping up on good earnings. I'm assuming here it had good earnings. Sometimes it doesn't, but the SPY heading up on good, Oracle heading up on good earnings. Oracle posted. Number 1, it posted upgrades. Morgan Stanley boosted it. Jefferies, Barclays, Guggenheim, BMO. They all raised price targets and more. Yeah, I'm looking at the earnings. Oracle showed first quarter profit. Revenue went up, and then they won a big AI contract. So IBM is going to acquire Oracle service provider Excel Alpha. Terrible name. But Oracle and Google Cloud announced general availability of PF Oracle database at Google Cloud in 4 regions across the U.S. So Oracle did great. Adjusted EPS was $1.39. Revenue was $13.31 billion for Oracle, and it definitely benefited the market. This is dragging the market up a little bit as well. It's at 152s right now for Oracle. Big move up. GameStop again gapping up some also. Palantir. Definitely top 3 funniest ever. Yeah. My daughter tells me I should be a stand-up comedian, you know. I don't know if I'd have the guts to do it, though, you know. Like, again, like, I can be in front of hundreds or thousands of people in this live stream, and I can't see you guys. So, to me, y'all just don't exist. Y'all are pretend imaginary people. And so, it's not like I don't get nervous being in front of anybody here because I can't really see you guys, and so I'm just kind of sitting here talking to myself, you know. But if I was in front of, you know, 250 real people right now, you know, there's no way I'd be able to hold it together. And so I don't think I'd ever be able to do that. I have 15-acre estate. All but 2 are connected by Cat 6 standalone network. They are 2 linked with UB&T. Oh, well, that's cool. It's a lot of work, though. Yeah, definitely. Oh my gosh, dude. Oh my gosh, dude, that's horrible. What does this dude do in that pawn? Yeah, I wouldn't. I'd be, you know, yeah. Yeah, there's a jiu-jitsu guy with the same last name. All right. What was that? Somebody knocking on the door? Sometimes Carol will knock on the door and I can hear the knock back, but not today. I am a figment of your imagination. You are, really. What's happening today? Yeah, so we have GameStop earnings today. GameStop earnings. Tomorrow we have CPI inflation data. With manufacturing being crap, I am shocked they are doing so well. They are mainly ERP systems. Yeah. Yeah, BLMZ gapping up in it. Some, I'm not sure what that really is, but it's gapping up a little bit as well. Again, where's Palantir at? Palantir up almost at $35 a share. Dude, everything has dropped 20 to 30% these past few months. Yeah, but that's a reasonable, like, listen, guys. Like, I guess this, like, I see this sentiment a lot. Where if we look at, let's drag up the Q or the S&P or something here. We'll put the SPY up. SPY's a good example. All right, so we'll put a yearly chart up. This is a 3-year chart. And so what do you notice about this 3-year chart on the SPY? Right, you'll notice we've got, it's a very common trend, right? It's super predictable as well. Like number one, you could literally draw like a super trend there. Anyways, it's super predictable. And what's predictable? You get a big upward move, couple month correction. Big upward move, couple month correction. Big upward move, couple month correction. Big upward move, you know, like that's inevitable. That's normal. That's how the market moves. You know, you're not going to go up forever, infinitely. You're not going to go straight up. We're going to have pullbacks. We're going to have a couple red months. And I'm here to tell you, every time you have this right here, literally every time you have these couple month corrections, what happens? The bearish traders come out. All right, sorry guys. So Carol had to come in here. My son's apparently not listening and causing problems, and so she had to come vent to me about my son being, you know, not behaving correctly. All right, let me catch back up on stream. Yeah. So, anyways, the point I'm trying to make here is like every time you get these big corrections, what happens, man? Freaking people come out here acting like it's the end of the world, it's a market crash. And again, to be honest, social media has fed that to you, right? Like you know, you want to know one of the overarching themes of pre-market crash markets? You want to what's the overarching theme? Not that many people saw the writing on the wall. You know, it certainly wasn't something where every other person's coming out here thinking the market's about to crash. That's not the normal conditions of a pre-market crash market. That's just not how it goes. Most of the time, nobody knows the market's about to crash. Really, usually there's mania that actually happens pre-crash, which means that generally the market's moving up and nobody thinks the market's going to crash. Everybody's excited. And so if a lot of people come out here trying to tell me the market's going to crash, I'm usually pretty skeptical. You know, we saw this here, right? Like, I'll give you an example of this. All right, so right here, let me make sure. So I'll put a See, I gotta get a weekly chart up. Hold on. Monthly chart's a little bit too extreme, but I can still probably use it. All right, so right here, after this crazy big drop, what do you think people were telling me right here? Right? People were telling me the market's about to crash. Everybody in my chat room was telling me market's about to crash. And I told them the same thing. I said, hey, look, usually when the market crashes, nobody's ready for it. And again, they made fun of me. They called me names. They said all this different stuff. Right? In hindsight, after that, 2023 market did one of the best years it's ever done, 23%. And who was sitting there holding nothing? The people who always thought the market was going to crash. Right? And so I say this once, I'll say it again. I try to say this pretty regularly so people can really hear it, because sometimes repetition helps people digest what I'm saying. I'm not saying the market's not going to crash. It could crash. I'm not saying we don't go into a recession. I'm not saying any of that stuff. What I'm saying is that most people are not going to be able to predict the market crash. Like, you're just usually not going to be able to do it. It's a sudden, quick thing. Sometimes it's spurred upon by big banks. It's not something where everybody and their grandmother on social media is telling you the market's about to crash. That's just not the normal state of it. It's also not something that happens a lot. Usually crashes, like real crashes, happen maybe once every decade plus. You know, how many mini crashes have we had over the last 3 years, 4 years, 5 years? We've had a bunch. And so the likelihood that we're going to crash again, I'm not saying it's nothing, but it's, you know, I'll give you guys the recipe for a crash, right? If we do crash, it's going to have something to do with Nvda falling down to like $60, $70, $80 a share. If Nvda falls that deep, that could spur a market crash, 100%. And again, that's what it will look like right now. That's what it would take for the market to crash in that regard, is Nvidia falling down like that. If Nvidia starts to drop down to $70, $80, $90, that might cause panic everywhere, and people might freak out, and that might start a market crash. But again, if you find yourself trying to bet against the healthiest companies in the world, if you find yourself trying to pick the tops of the healthiest companies in the world, somewhere you have been misled into thinking that that's a bigger edge thing than it really is, and you're getting pulled in the wrong direction. You're trading against the biggest statistical edge the stock market ever gives you, which is that blue chip healthy companies generally go up over time. And the longer you hold those positions, the less likely you are to make money, not the more likely. Yeah, I don't know which way the market's going either. So Verizon, one of the top divvy stocks of the S&P, its payout currently yields over 6.5%. The problem with Verizon is that I'm worried about big corrections on the downside here. What's it doing on the year? So Verizon's had a pretty good couple year period, honestly, for a high-paying dividend stock. Is it easy money? Of course not, but it's had a good enough year, I think. All right, so does tomorrow's CPI inflation come in higher or lower than the 2.6% year over year expected? Higher, lower. Vote on the poll. Let me know how you feel. Again, okay, there's the poll. I'm not sure if the poll's even going to work. No real data today. This is the last day of the week where we don't have big economic reports and data. The big data shows up. The big data shows up tomorrow. Hey, thank you, Matt. Nvidia can easily go 50, by the way. I mean, it could. Will it, though? It's a different story. Yeah, Nvidia up to 107s, 110s. You know, again, you got a lot of people that missed out on the big run for Nvidia that now kind of, I'm not going to say they bet on its downfall, but I think right now, again, maybe, and this could just be confirmation bias, right? We're all susceptible to it. I think my bias is on the upside. You know, I think Nvidia's pulled back enough from its highs. It's almost down to $100 a share from 140. It's a big percentage drop. It's a big percentage drop. And so I generally think we're going to go up, but I think anything could happen. You know, I think anything could happen. You know, I'll tell you what I don't want to buy right now is gold. I do not want to buy gold right now. Again, I might be wildly wrong. If the economy turns, maybe gold's a good buy. I really don't know. But I don't want to buy gold simply because gold can downtrend long term. And I don't want to get stuck in that. It's been uptrending for years now. Gold has been upwardly trending since October of 2022. So basically for 2 years straight, gold has been going up, up, up. Hasn't really downtrended for very long. Really, it's been in an upward trend since 2021. That's starting to look like a long time. And again, the reason I don't want to buy gold right now is because it's been upwardly trending. Really, gold's been upwardly trending since 2015. And so gold can uptrend for a long time, but then it can also downtrend for a long time. And so for me right now, I'd prefer to DCA into gold on big pullbacks. Maybe it's not a DCA, but I'd rather average into gold on once it's been pulling back for a significant amount of time is what I'm trying to do it. Oh, trust you, bro. Yeah, I mean, again, Marcus says, trust me, Nvidia will hit $60 soon. The problem with this type of mindset is that, you know how many people I've had come here and be like, hey, bro, trust me, the market's going to crash tomorrow. Watch. Just wait. Just watch. And then tomorrow rolls around and the market rips up 5%, and then it's just crickets, right? They create another username, pretend they never said it, and then, like, you know what I mean? The problem with definitive statements, Marcus, is that it shows a lack of experience, brother. It genuinely shows a lack of experience. The people who are most likely to make definitive statements like this is going to happen, right? Especially something super subjective or super variance heavy, I should say, like where Nvidia goes and whether Nvidia hits $60, which is a huge percentage drop, right? Like that is something that is super variance heavy, depends a lot on a lot of different things, and so saying something's absolutely going to happen is silly, I think. Nobody freaking knows. Maybe it does. You might be right, but there's also a big chance that it doesn't. And it's all good. I'm not insulting Marcus. He could believe whatever he wants to believe. It's all love here. It really is. He might be right. I don't know. But I tend to, anytime I see somebody being like, hey, this is going to happen, I usually get skeptical. Anyway, SPY up to 550 or 546. 546. So Apple had their event yesterday. See, this is where AI really shines. You want to see where AI really shines? Like, look. I can say summarize the Apple event that happened yesterday in 100 words. Apple's Glow Time event, they unveiled several new products and features, highlighted the iPhone 16 featuring the iPhone 16, 16 Plus, Pro, Pro Max, all powered by the new A18 chip. And boasting enhanced cameras, the Pro model offers 48 MP camera, 4K video, larger displays. They also introduced AirPod 4s with improved sound, USB-C charging, alongside updated Apple Watch series and Watch Ultra, which included sleep apnea detection and more fitness tracking features. So that was the Apple event yesterday. You can see Apple stock didn't really do that much. Hasn't really moved in some significant, like, big way, really, here. Yeah, probability and possibility are two different things, you know. Something might be possible, but it doesn't mean it's probable. Meaning something could happen. I could win the lottery every 3 days in a row. Or I could win the lottery for 3 consecutive days in a row, I mean. And that's possible, right? Is it probable, though? No, it's not. You know. glitches in the trading system. Yeah. Where's Tesla at? And so again, GameStop earnings today. Tesla up to 220s again. SPY up there. SPY's still pretty close to lifetime highs. You know, it's still got a ways to go. About, you know, SPY's like, yeah, the SPY is like $25 away. Or the SPY is $20 away from lifetime highs. So it's possible, you know. Okay, so it looks like the polls are finally working here. Here, I'm gonna zoom in, fix this. There we go. The higher possibility is shorting the highs. So you think the biggest edge is shorting highs, Marcus? In blue chip stocks? Genuine question. Again, if that's how you really feel, I think somewhere you've been misled, brother. You know, I think Michael Burry and you got to understand where the sentiment is really coming from. Okay, if you look at big YouTubers, what do a lot of them want? They want views, right? I'm a YouTuber. I want views, right? I want good views. But what happens is that I think pretty quickly in YouTube, when you have YouTubers, right, they recognize that telling people that there's a fire is more exciting than telling people things are fine, right? And so what happens is you got these YouTubers that every other week they're telling you the market's going to crash. Every other week they tell you the market's going to end. You got Michael Burry trying to be the next big short predictor. He's been wrong over and over and over again. But he's trying to be the next big crash predictor, and people idolize that. They look up to that. They look up to things like the Roaring Kitty situation with GameStop, and what ultimately ends up happening is that they end up wanting to believe the market is going to crash, right? What the statistics actually show you is that the biggest edge, again, the biggest statistical edge is on the long side, and it's not even close, right? Like you are almost guaranteed to make money if you buy something and you sit on it long enough. And so the longer you hold a long position in a blue chip healthy company or an index fund like that, S&P, the NASDAQ, the Dow, the more likely you are to make money, not the less likely. You know, the longer you hold a short position betting against those strong companies, the less likely you are to make money. You know, and again, you got to recognize that a lot of these YouTubers have been telling you the market's going to crash every other week, and they've been wildly wrong. And so you just can't fall for it. And again, my bias is that I run a community and I hear people all the time tell me the market's going to crash and burn, and it never does. And so, you know, the problem is that there's so many egos floating around that when it doesn't, they end up blaming it on something else instead of like recognizing that they might have been misled to believe these things in the first place. You know, the other thing is that, like I've said before, the more definitive somebody is in their predictions, the less experience I think they generally have, because we're all looking at probabilities here. Nothing's set in stone or for sure. And so if you're telling me that something is absolutely going to happen, I usually look at it, and depending on what it is, right? Like a rate cut this month is pretty certain. You know, it doesn't mean it's 100%. There's always a chance that Jerome Powell shocks the world and then doesn't cut rates this month. It's pretty low probability, but it's possible. But that's my point, is saying something absolutely has to happen. It's not usually a good sign of trust. Yeah. Mara, hey, what's up, Justin? Yeah, it's all good. Palantir, yeah, Palantir got added to the S&P 500, Marie, and so Palantir and Dell getting added to the S&P, and that's definitely boosting their stock. You know, Dell went all the way up to almost 110s. You know, Dell, I think it's a little bit late to add it to the S&P, but that's okay. I think Dell's a good company. I bought a lot of Dell computers, and they're solid. PCs, that is. I know people always get mad at me for not building my own, but yeah, well, CPI tomorrow is going to be the biggest event. So CPI, what it's ultimately going to depend on, Marcus, is a couple different things, right? So next Wednesday is the Fed decision. So it depends on how the market reacts to the Fed decision. If the Fed cuts rate 25 basis points, I don't know if we're going to get a big negative reaction to that. If the Fed cuts rates more than that, that's when we might get a big negative reaction. The other thing is this week we have CPI inflation data tomorrow. So CPI data comes out tomorrow. It's a huge report. It's a relevant report. PPI follows it on Thursday. And so this is one of the biggest inflation reports that we see here, right? Like generally with CPI, we're going to generally have 4,000 or 5,000 people watching us when it comes out at 8:30 tomorrow morning. And again, we'll see what happens. Again, they're expecting it to decrease again month to month or year to year. Last time it showed up at 2.9%. This time they're expecting CPI to show up at 2.6%. People are essentially expecting inflation to continue to go down, which means that they're probably going to cut rates this month. Right. The only way they wouldn't cut rates is if CPI spiked up to like 3.5 or something crazy, and then we also had some bad numbers coming out afterwards. But it's pretty low probability. I think at this point in time, the question is not whether we cut rates, it's how much. Because I think 25 basis points is what everybody expects. But again, if the Fed comes out there and does 50 or even 75, which would be crazy, the market's going to panic, and that might cause big drops in the market. What do you guys think they're going to do? I think I did a poll on this. What did I say? Yeah, does tomorrow CPI come in higher or lower? 51% think lower, 49% think higher. So the Australian government on Tuesday is trying to put age limits on social media. They promised to legislate this year to enforce a minimum age for kids on social media, but it's yet to be announced how they're going to verify it or anything like that. The line would be drawn between the ages of 14 and 16. Honestly, I agree. With that. I don't let my kids have social media. My daughter's 15. Still doesn't have one. She really wants like Snapchat, Instagram. But I just told her, look, and she has friends whose parents have basically let them use social media since they were like 10, 9. It's a different age. When I was young, I didn't have a phone until I was 15. I didn't have a cell phone until I was 15. When I did, I had like a brick cell phone. It was not a good phone. But it's a different world now, man. Kids get phones early. My son has a phone. He's 10, but we don't let them use social media. They're too young. The problem with kids and young people and teenagers is that they're desperate to fit in, right? And so when you're that desperate to fit in, it's easy to get manipulated into dumb stuff. So that's why we keep them away from social media. Yeah, Tesla almost at 220. It's at 219s. CPI is tomorrow at 8:30. They will likely engineer a soft landing. Maybe. Hey, what's up, Jan? Buddy. I mean, some of it's good. It depends. Like, I'm a big business person. So I like business. Social media is fun. But it depends, right? Like, it really depends. Yeah, so I don't think GameStop's doing an earnings call today, right? All right, so yeah, GameStop going to be announcing earnings today after close. Last time they missed analyst revenue expectations by 11.5%. Last quarter, they reported revenue of $882 million, down almost 30% year to year. It was a weak quarter. And so everybody's going to be paying attention to this one. This quarter, analysts are expecting GameStop's revenue to go down another 23% year over year to almost $900 million, which is a big reversal from the 2.4% bump it recorded in the same quarter last year. Adjusted loss is expected to come in at 9 cents per share. So, yeah, a lot of people are going to be watching retail. Best Buy's revenues decreased 3.1% on the year. And so a lot of people are watching this to see what happens for it. You guys got any predictions for GameStop? Again, GameStop's been bumping up ahead of their earnings. GameStop's one of those stocks that even if it has what would be agreed upon as bad earnings, it could still fly up, right? It could still run. It could still do good things. And so I'm not going to count it out. Didn't Roar and Kitty say something recently? Yeah, so September 6th, he did another meme. It was his first meme since June. All right, so again, so Roaring Kitty posted a video of a kid dropping a dog toy. People are trying to digest this. They said in Toy Story, the scene he's referring to is an emotional and pivotal moment in the film. Andy is playing with his toys, and there's a transition happening where Buzz Lightyear has become his new favorite, inadvertently making Woody feel sidelined. During a play session in Andy's room, there's a moment where Andy is animatedly playing with Buzz. In his excitement, Andy grabs to mimic Buzz's ability to fly. He grabs Woody as if he's going to continue playing with him, but then he spots Buzz. It's a symbolic gesture of him dropping his shifting affections. He drops Woody to grab Buzz instead. It's shown in slow motion to emphasize the emotional weight of the scene. And so basically, it's crucial. It's not only advances the plot, but intensifies the rivalry between Woody. So basically, but he put a dog face over it. So I guess what you could interpret this as, right? So again, I'm going to show you what he posted. What you could interpret this from Roaring Kitty as is him shifting towards Chewy, is possible. So he's shifting towards a dog. Right. So, who knows? Who knows? Interesting for sure. And, yeah. All right, so yeah, Southwest Airlines also shook up the board after coming under pressure from big shareholders. So Southwest is going to revamp its board, and its chairman will retire next year. It intends to keep CEO Robert Jordan. They said 6 directors will leave the board in November and plans to appoint 4 new ones. Woof has earnings today. Maybe that's what it is. Hi, my first time here, so what's really going on up in here? I don't know. We're hanging out looking at stocks. Top 3 worst trader of all time in the world right now. But top 3 best simultaneously. So, hey, I appreciate the love. Yeah, so looking at our poll numbers, people are pretty split on what CPI is going to show up as tomorrow. Are you covering the Bank of Canada? What's going on in Canada? I don't even see any inflation data or anything coming out in Canada today. You got the Bank of Canada governor speaking, but that's it. That's nothing big, though. It's nothing major. We got Michelle Bowman speaking at noon today. Tomorrow's the big day, though. Again, CPI inflation data coming out tomorrow. That's the big report. Chewy is a better company. Yeah, it could be. I think Wolf Petco has earnings today too, right? Or somebody said that. Maybe I'm not sure if it's correct. Yeah, dude. Honestly, he's a legend, bro. He's a legend, Ty. I was watching Dumb Money like a week ago with my wife, and she was into it too. You gotta respect it. And honestly, it's a movie that I relate to more than people would really understand, right? Because like I've been live streaming exactly like that on YouTube for years, right? For years. And the GameStop event really grew my channel. Prior to GameStop, we were getting like a couple hundred people, right? Once GameStop hit and we bought GameStop and we covered the big squeeze that was happening as it was happening, right? We went from getting a couple hundred to thousands. And then, we started covering economics and looking at the whole thing. And so now my channel is growing crazy. We're getting, a lot of the times we're getting over 250,000 views a month now, and it was just really good for the channel, for sure. So, again, I relate to it. There's no other movie that I can relate to in terms of, like, working on it on YouTube, Yeah, my wife asked me what that guy's net worth is now, and I told her it's like, what is it? What is his net worth? Isn't it like Look at Nvidia spike up almost up to 108. So this should drag all the markets back up with us too. Look at the SPY heading up to 547s. Yeah, so his net worth, is it really over 250 million? Is it that high, dude? I never thought it would be that high. Some people are saying his net worth is over 250 million. I guess just his personality, who he is, might make it that high, but I can't imagine it's over 250 million. Yeah, shift back to GameStop could be it for sure. GameStop's up too. GameStop up to 2460s. It's possible. Nvidia breaking highs of the day, moving on up. SPY getting dragged up with it. And the question is, does the SPY break highs? The SPY is less than $20 away from all-time highs. So yeah, gold's running. Gold pushing back up. Yeah, gold has been basically sideways though for so long now. Like for the last 20 days straight, gold has been sideways. It hasn't gone anywhere since for the last month straight. If you look back at gold on August 16th, it is literally nowhere. It's basically completely sideways. And honestly, it's in a really predictable range. Tesla just broke highs. Nvidia's pumping up. So we are getting some strength here in markets. Interesting. Brother, like you see how the world is full. You don't think it's a pump and dump like every day last week, up right away and flush? Not necessarily. I mean, we don't know. Nvidia could do anything, man. It really could. I really have no idea what it's gonna do. The real tricky one is the residential real estate market, right? So with the Fed almost certainly cutting rates this month, what does that mean for real estate? Do you guys think the real estate market goes up or down in the next 2 years? You know, and I know people might say, oh, well, the market's going to go down because people are just bearish about it. But if we cut rates, what does that mean? By cutting the federal funds rate, eventually it's going to trickle into mortgages, and interest rates for mortgages are going to decrease, which consequently could cause residential prices to increase. No? At least that's what I'm guessing here. I don't know for sure, but that's what I'm guessing. So we need this crypto parabolic rally. I know Bitcoin. I know stuff's going on because it got back to even my wife, right? My wife saw some TikTok where the TikTok basically said Warren Buffett sold all his stocks. Bitcoin fell down, right? What else did they say? And then they said some other really scary stuff. So my wife's like panicking, like, "Oh no!" And I kind of told her they're taking it out of context. You know, like the market is still up on the year, right? So people are acting like the market's going to crash. The SPY is still very green on the year. You know, the S&P 500 in 2024 started out at about 470. It's now at 550 basically. So the S&P 500 is up a huge amount this year already, like a big percentage amount. A lot of it is, and then it also, oh yeah, the other thing it said was that Nvda dropped 10%. And I had to explain to my wife, I was like, look, sure, Nvidia dropped 10%, but prior to that, it's up hundreds of percent short term. You know, if you look at Nvidia here, again, on a long-term chart, even just this year alone for Nvidia, right? This year alone, Nvidia, at the start of 2024, Nvidia was at a post-split price of $50 a share. It's now at over 100. It's up 100% this year, even with this drop included. You know, and what I had to tell her was like, look, there's some stocks that are just highly volatile. Whenever a stock moves up this much, usually it's going to have a pretty big freaking range, right? Like usually the range that this thing is going to go up and down is going to be increased, right? And you can kind of see that. So we had this big move up, down. So Nvidia is really kind of sideways. It doesn't mean anything too like yet. Let me put a weekly chart up. I prefer weekly charts over monthly charts. So hold on. Let me I don't need a quarter over quarter chart. I just need a weekly chart. Okay, so here's the weekly chart that I wanted. You know, you can kind of see Nvidia had this big increase, and now it's mostly just chopping sideways. So Nvidia big increase, up, down, up. Now we can basically say, you can call it a flag, you can call it whatever you want to call it. But Nvidia again is it's already up so much. Again, guys, I'm curious. Let me know live in chat. What do you guys think? I'm gonna do a poll. I already asked, does tomorrow's CPI inflation come in higher or lower? 52% think lower, 48% think higher. I'm gonna do a poll now. And what I want to ask people is, do home prices increase or decrease over the next 2 years? Is what I want to know. Do home prices increase or decrease? With rate cuts looming, I should say. With rate cuts starting this month, do home prices increase or decrease over the next few years? Prices going higher. So, well, home prices do go down, right? It's not like if home prices only went straight up, then nobody would invest in anything else. But it's kind of like the S&P, right? So home prices generally go up, but they also have periods where they don't. And so the problem is that home prices have kind of looked like this. Like the graph for home prices kind of look like that, you know. But rate cuts are coming. So the interest rates for everything are going to start going down over the next few years. There's generally a lag. Like the Federal Reserve will lower the federal funds rate, and it takes a little while to trickle into everything else, but eventually it will. And so in theory, if rate cuts are coming, and the Fed says that they're going to cut rates 4 times this year, meaning like every meeting from now on, they're going to do 25 basis point cuts for the rest of this year, is what, in theory, that's what they're going to do, right? We don't know for sure, but in theory, that's what they're going to do. If that happens, then over the next few years, interest rates are going to go down, right? And that might cause home prices to go up more, no? But again, at the same time, home prices have already increased 60, 70% in the last decade, or in the last 5 years, I should say. So you could also argue that we're extended in terms of home prices, and that lowering interest rates is going to cause an increase of competition and thus lower prices, right? That's an argument as well, and that both of those things could happen. It depends on a lot of different situations, but yeah, let me see what the poll says. So 56% say increase, 45% say decrease. Yeah, for sure. Exactly, Jordan. Right. So I'm reading Jordan's comment now. I think the opposite will happen. Prices will start to come down because supply will increase. 100%. There's more competition. That's a possibility too. Either way, though, they're long term. They're probably going to go up. Yeah. Yeah, I don't really finance cars, but what's the current interest rate on automobiles? So the current interest rate for car loans is 9.56%. I was talking to some guy from jiu-jitsu, right, and he was shocked at how high interest rates were for car loans, right? Like one of my friends is this guy. He doesn't speak great English, but he's a Korean guy, so he's from South Korea. Great dude. His name's JB, right? And he was talking to me about, like, he just moved here, and so he's having a hard time. Like, he can rent, but he doesn't have any credit history here, so he's having a hard time, like, buying a house, hard time getting a loan, hard time, like, qualifying for a mortgage. And he said when he went to go buy a car and, like, finance a car, he said the interest rate was 10%. And this shocked another guy that I trained with, like another friend of mine at the gym. And they were both kind of like, man, 10%. But at the time I was sitting there thinking 10% doesn't seem that high relative to what we've seen in these markets over the last 5 years. Look at the SPY go here, guys. SPY go, and I'm assuming Nvidia is breaking highs still and continuing up, which it has been. And so, yeah, as of August 31st, the average car loan interest rate is 9.56%. And this is the average, which means if you have bad credit, it's probably going up from this. I can't justify 10% a year interest. That's crazy high. Tesla pumping up. Yeah, I see Tesla up to 220 plus now. So Tesla's running up too. Here's Tesla. Again, Tesla up to 220s. Needing credit to rent a house here. Yeah, I mean, for a lot of people, I mean, you don't have to have great credit, right? You just need something. You need to make enough money to justify it. You know, so you have to have good credit, or you have to have some credit, but it doesn't have to necessarily, like, you can have a 600 credit score and rent a house. You just got to have the income to back it up. But they do credit checks. Gold about to pump up too. I don't know. Gold's been pumping up. I think gold might go into a bear market sometime soon, just based off of history of it. But who knows? Again, I'm guessing. It's never like a certainty. I'm just straight up guessing here. Yeah, I got 2.7% in 2020. Yeah, for sure. And that's the reason why a lot of mortgage brokers, real estate agents, lenders are struggling, because even with lowering interest rates, like, what's the current mortgage rate? It's like, what, 6.5%? So the current mortgage interest rate is 6.99% for 30-year fix. 15-year is about 6%. 10-6 adjustable rate is 7.3%. So it's anywhere between 6 and 7% right now. And even though that is not, like, historically super high, we were getting in 2019, 2018, 2020, rates were at freaking 2.5, 3%. And so very few people are going to have an interest in refinancing right now. And so that's putting a struggle on a lot of people, right? And again, I've known mortgage brokers that just get really weird because sometimes the desperate people do desperate things, right? And so their business basically fell off a cliff after 2021 and 2022, when Fed started raising rates. It went from and everybody got really comfortable at 2.5%, and so super cheap money, right? And what this means, just to understand economics, is when interest rates are really low, everybody has much cheaper access to money, right? So if you want to get business loans, car loans, housing loans, whatever, everybody has much cheaper access to that money. Like, you can get loans, pay very little interest, and do a lot of different stuff with it, right? And that stimulates the economy, but also causes inflation. And so the consequence of that super low interest rate environment, and again, it wasn't just from that. A lot of it had to do with stimulus checks and money printing that happened following the pandemic when the Federal Reserve was trying to save us from like a deep recession or depression. They printed a bunch of money. They sent out stimulus checks. All these things contributed to inflation problems. And we're only just now getting back to like relatively normal inflation speed, like of growth, right? At 2.6% is what they're expecting tomorrow. So we're kind of just now getting back to normal after all of that stuff. But yeah. Do you feel it bullish or bearish today? I really don't know. I really have no idea what the market's going to do. I think things are looking bullish this morning. SPY up big, Tesla up big, Nvda up big, GameStop earnings are today, Bitcoin's bouncing back in green on the day. And so a lot of stuff looks good this morning, but it doesn't mean it's going to hold. And sometimes you get kind of like the inverse effect of pre-market, where stocks move up really big in pre-market and then fall at the opening bell, i.e. yesterday we saw a very similar thing. So it doesn't mean anything yet. I like Google long term. I think Google's a very diversified and powerful company. Alphabet, very diversified and powerful company that'll do well long term, I think. They've gotten involved with AI. Their AI systems in Gemini are solid, and so I think they're going to be fine. Hey, nice Yair. Also in biotech. Biotech's usually really risky. I don't know pharmaceutical industry well enough to bet on biotech stocks. I think if you're going to invest and bet on biotech stocks, you have to understand those markets. And I don't understand pharma very well, right? And I'm not afraid to admit that. I just don't understand the pharmaceutical industry super well. A lot of nuance, a lot of trial results and variables that can influence your positions in a big, heavy way. And so, but it's one of those markets where if you know them well, you can get very, very wealthy betting on biotech stocks, for and against. But if you don't understand that market, you can get pulled in a lot of different dumb directions. You might think drugs are good before really understanding them and get rug pulled. Like, there's a lot of risk there if you don't understand those markets. So I think if you're going to play biotech, do not be some random dude that doesn't understand that industry that's just out here selecting biotech stocks. You know, if you're going to get involved with those stocks, you better understand that niche very, very well. Like, you need to research and research and research and research. Because if you don't, you are going to be susceptible to people manipulating you, acting like something's the new wonder drug, and then rug pulling you and stealing all your money, right? You're very susceptible to that if you don't understand the market. And so I avoid it because I don't understand the market. I don't understand biotech stocks. It's not where my edge is, for sure. But some people have a good edge, you know. What happened to Siri? Well, Siri's obviously going out of business here. You know what I mean? Like, Siri is obviously one of those stocks that is, I think they split, right? They had to split. So Siri is obviously one of those stocks that is obsolete now. It's simply obsolete. There's no reason to buy Siri. Over time, less and less people are using radio. And so less and less people have a need to use Siri. You know, it's just not something that's going to be... It's not something in which you're going to benefit from, or it's not something in which there's any arguable future for Siri at its current business model, is what I meant to say. And maybe there is. Let me hear it if you have one. But Siri radio's dying. It's obsolete. Nobody uses it. Technology has evolved past it. Smartphones have made it obsolete, and nobody needs a radio in that regard anymore. I wonder why Warren bought him. Well, Warren Buffett's not, like, there might be some value, you know, but you don't know why Warren Buffett. The company could have approached him and sold him on a deal, and he could just be supporting a company and you know, taking pay for it or something. Like, it doesn't, just because he bought it doesn't mean it's good, you know. Are you serious? Hey, what's up, John? I'm good, man. I'm good. Stomach's hurting. I ate some nachos yesterday. My stomach is out of whack. But aside from that, I'm good. I love Sirius XM. A lot of old people like it as well. Yeah, for sure. I mean, I bet they do, right? A lot of old people like 8-track players and, you know, TV channels, but that doesn't mean they're gonna be okay. Again, that's a big problem, right? Older people might like Siri. As a new generation sprout up, it's gonna get used less and less and less and less, and so it's completely rendered obsolete and nobody uses it, which is kind of where it's at now, I think. I don't want to sell my current house because my current mortgage is only $297 a month, but I only have $5K saved for a down payment on a new house. What do I do? I mean, I have no idea what you should do. I'm not a real estate or investment professional. I'm not liable. If you lose money, make your own assessment of the real estate market and buy and sell with your own liability in mind. Because I am not liable. I have no idea what I'm talking about. I'm definitely one of the top 3 least knowledgeable people in real estate in the world right now. I do have an inactive real estate license that I never use. But, yeah, I don't know whether you should buy or sell a house or not. If it was me, I probably just wouldn't buy a new house. If you know... I guess it depends on your interest rate as well. Tomato. No, there's still a market for sure, Scrub. I'm betting on the future, not right now, though. Like, I'm sure there's still some people that use Siri, right? Like, that's obvious. But the amount of people that uses them over time is going to very obviously decrease, is the problem. Until it fails, till nobody's left. Which is probably why they sold themselves, so they can get out and probably make some money. I'm not familiar with it, David. Never really heard of it. Not really familiar with it. I'm a Louisianian, and so I know some parts of Texas, but I'm not from here. Yeah, it's inevitable, right? It's not right now, but eventually it's going to fail, and that's very clear. That's very obvious. Everybody understands that. Yeah, $300 a month, bro. I'm not sure what kind of mortgage you have, brother. But $300 a month, dude. It's at the bottom of the state, close to the water. I'm not a big fan there of buying anywhere near there. I think the risks are high. Same reason I don't want to buy in Florida too, because the risks are high. Tyrese Gibson been arrested for failing to pay child support. The judge handed him an opportunity to avoid jail time if he pays $74,000 within 2 days. Crazy. Crazy. All right, chat. All right, guys. So the question is, do we hold this morning's gains? Yeah, for sure. 3.5 interest rate. I'd like to keep that house as a rental. It's only 1,000 square foot, and we've grown out of it. All right, well then keep it as a rental. Throw some tenants in there. You know. Florida is crazy prices. With the beach, yeah, with the beach poles or the beach properties, I'm always skeptical to buy beaches, right? Like I live in the South. I've traveled to Pensacola and Miami and South Florida. The problem is that buying property there is risky. Why? Because every few years a hurricane comes and destroys a lot of the beachfront properties. At the very least, floods the heck out of them. And so buying a property there only for it to get destroyed, it seems like a risky investment. It's not something that I'm necessarily interested in, even if it has good returns, right? I think the argument against that would be, even with that aspect of it, number one, people are going to say insurance. Number two is that, again, number one is insurance. Number two is that it makes enough money, even with that aspect of it, to justify it, right? So if you get an Airbnb in a super sought after place, you can make hundreds of thousands of dollars a year. And so you could basically pay for that place every 5 years if you make enough money. And with insurance added onto it, it's still probably a good investment, I would say, for some places, as long as it's the right property. But it depends. Yeah, so the rate cut predictions here. %73% of people are saying a 25 basis point cut. 27% of people are saying a 50 or more. You said insurance in the company went up as well. Yeah. Insurance here is finding reasons to drop people so they don't have to dish out. Yeah, I believe that. Hard to cover a home worth $100,000 and mortgage at $200K. Yeah. And again, guys, stick around. We are going to be trading on TopStepX today. TopStepX is a funded program in futures. They give you a demo. They test your skill with a demo account first. If you pass the test, they fund you. If you fail, you only lose what you pay for. The big edge with TopStepX is that there's no commissions. And so I can trade small contracts, get out with almost no commissions, and they pay out 90%. And so you can day trade the S&P and the NASDAQ in futures, same price action as the SPY. And Q patterns are very similar, but your risk is only what you pay for. The base one on TopStep is $49. And again, you can use TopStepX with no commissions. They are an affiliate of mine. They pay me money. I'm going to put the link up in the chat right now. Check it out right there. I'll be right back. All right, guys. So, yeah, NOLA is New Orleans, Louisiana. It comes from New Orleans. I'm from Louisiana, so I'm from about 45 minutes away from New Orleans. They keep trying to raise the rates. Yeah. If you can find good insurance, it's fine, but finding good insurance is harder than it seems, I would say. Like, finding good insurance is very difficult. All right, so... All right, so again, we do have... I'm going to be day trading today too, guys, so stick around. Again, we do have... GameStop earnings this afternoon. We'll cover it. Yeah, so yeah, that's pretty solid. GameStop predictions for earnings? I have no idea, man. How you feel about Super Bowl? Listen, I like Kendrick. I really do. But I'm from Louisiana, and so I'm going to be a Lil Wayne guy. By far, he's my best choice is Lil Wayne, you know. He's arguably the greatest, I would say. For me, as somebody from Louisiana, like Lil Wayne's better than Kendrick. Now, I know people are going to be like, Kendrick, and I get it. I do. I understand. But yeah. Right now, interest rates are so high that a lot of people have money sitting there and earning interest. Once interest rates start to come down, won't that money flow into stocks, cryptos? Maybe. Yeah, definitely top 3 ever. I mean, I think that's possible, Jay. But I think you know, I don't know. I don't know if it's as predictable as that. It might be. I just don't know if it's as predictable as that. Okay. Okay. All right, love you. All right, guys. Nvda at 108, still pumping up, still making moves. It's all subjective. M is not even in my top 5. No offense, right? Like, I get it. He's a white rapper, and like people like him because of that. I just don't ever like. I had an Eminem phase when I was young, right? Like when I was a kid, the Marshall Mathers LP came out, and everybody was freaking listening to it, right? So I remember that time, but I just don't listen to Eminem like that. I just don't listen to Eminem like that. It might remind me too much of like my rebellious dumb youth. You know, maybe that's it. But Eminem is just not that for me personally. It's subjective, right? He's not even in my top 5. I don't listen to him anymore at all. It's too angry and weird for me personally. Coming from the South, I was born in, you know, South Louisiana. It's just not my favorite. You know, he's just not my favorite. I'm not saying he's bad. And I understand some people like freaking love him and they are super about him. But to me, it's just like the music's a little weird and it's just too angry. I can't really vibe to it, I guess is the easiest way to put it. It's just too weird. I like Tupac. Tupac's at the top, right? Tupac, Biggie, you know. I still listen to Tupac. Tupac's good. If I had to make a top 5 list, it would be like Tupac, Lil Wayne. I'm going to go with like Young Jeezy as number 3. Number 4, I'm trying to think of like my favorites. I guess number 5, I'm from Baton Rouge, so I'm gonna go with like Kevin Gates for number 4. And then number 5, I'd probably go with like Jay-Z or somebody, you know. Like that would be my top 5. But again, it's a subjective list. Everybody's different. No, I'm not going to put Master P on my top 5, but I like Master P. I've met Master P. It's a funny story. I have met Master P. And I met Mystical as well. Look, y'all just don't understand. I'm from Baton Rouge, Louisiana, okay? So my top 5 is going to be different than your top 5. It's regional, okay? It's regional. Nah, not Nelly. Nelly is good, but he's not anywhere in my top list. You know, Country Grammar was good, but after that, you know, it was all right. He was versatile, but I'm just not a big fan of him. Again, a lot of you guys are not from Baton Rouge, so y'all don't understand why Kevin Gates is there. But Kevin Gates' old music, the ones that y'all have probably never heard, is very good. You know, very good. But again, you got to listen to his old stuff. Anyways, this is causing too much drama here. All right, guys. Tesla dipping down a little bit under 220. I'm going to put a GameStop back up here. Nvidia's starting to fall. yeah. Like I said, it's regional. Like I said, I'm from Baton Rouge, Louisiana. So I grew up listening to like Lil Boosie and Webby. Everybody from Baton Rouge grew up listening to them. They could be the most suburban person in the world right now, but if they grew up in Baton Rouge, they're listening to at least a little bit of Boosie and Webby, at least when they were young. If you're over 25, you know, you're going to listen to that. You're also probably going to listen to some Kevin Gates. You know, there's a lot of rappers that you might listen to from Baton Rouge. But it's regional. You know, it's regional. Everybody's different. I'm from South Carolina. Yeah. How do you feel about 2025 after all the recession talks? I don't know. I think it's possible we hit a recession. And honestly, in some ways, I don't think a recession would be horrible. I think a recession is going to do the most to combat inflation overall, right? So a recession is going to do the most to combat inflation. The only time that prices actually go down, like literally go down, is during recessions. And so that's the only time prices literally drop, like actually go down, is during recessions. Now, a lot of people don't want that, of course, but in my opinion, real estate prices have gone up into an unreasonable level. Inflation has risen to an unreasonable level. And I think maintaining a restrictive monetary policy stance for as long as possible is going to do the best for the economy long term. Short term, it's going to cause some problems and people are going to be unhappy, of course, because lenders want a never-ending supply of sales with low interest rates. But that's not a sustainable thing. And if we do that for too long, inflation's just going to go out of control like it has. And, you know, we got bigger problems. So, again, personally, I'm okay with whatever happens. I think stock market-wise, it all depends on whether these microchip stocks and the AI trends can hold. You know, in 2000, we had the dot-com crash with the longest bear market we had in a long time, and that stemmed from the internet. And the internet was that big technology that everybody uses now. And so it was that big technology, but we still had one of the longer bear markets we had seen in a while from the mania of it initially started. And we can see some correlations with microchips now, where AI might be that next big thing. It might be that next big thing that people use looking deep into a few decades from now, but we still might get a bear market from it if Nvidia can't hold its gains. And so I think that's the lens you got to look at the current market under. But I'm optimistic. You know, I want the market to go up. I don't want us to hit a recession, and I'm okay if we cut rates by 25 basis points. But if we start to do it too much, then that's bad. I can get down with some Mac Miller. I like Kid Cudi too. Man on the Moon was good. You know, the Man on the Moon album was good. And the song. But Yeah. Yeah, Bone Thugs are good, but again, I'm from the South. I listened to Bone Thugs for a while. You know, I had my phase of it. You know. I don't think 25 basis points will freak out the market. I think over that. I think anything over 25 basis points is going to make the market panic. Right? Like, that's what I think. I think anything over 25 will make the market freak out. So. I think the hard push on AI investments is driven more by... No, I think it's driven by people a lot. I think people have benefited from the rise, and so they want those to hold. But we'll see. Some of Nas, I like Nas too. Nas is some of... He was like... You know, again, it has to do with my own tastes. Right? Like, I listen to some of the old Nas songs. But, yeah, it just has to do... It's such a subjective, opinionated thing, you know. Yeah, over 25 is going to make... Why is 25 basis points... Why is higher than 25 basis points going to make the market panic? It's going to make the market panic because it's going to signal that something's breaking. And the market doesn't want that, right? So if we start cutting rates, if we announce like a 50 basis point cut, everybody's going to panic because they're going to assume that the Fed sees something that we don't. And that what I mean by sees something... I mean like recession, depression risks. So the longer we maintain a restrictive stance, the more likely it is we go into a recession or depression. But the economic data that we've seen does not necessarily signal that, and which is one of the reasons I'm against rate cuts to begin with, because unemployment's under 5%, GDP's 3+%, including the first revision data, which is usually more accurate than the initial estimate, or the second revision data, which is usually more accurate than the initial estimate. And so none of the economic reports that I'm seeing signal a looming recession, right? And me just saying this is going to bother some people because some people are getting super wrapped up. It's an election year, and the election has scared people. And again, during election years, the theme of markets is panic, right? So the side that doesn't have power is going to try to make you think it's the worst it could ever be so that they can obtain power. The side that has power is going to make you think it's the greatest it's ever been so they can keep power, right? Both of them are usually wrong, and it's somewhere in the middle, the truth. The truth is usually somewhere in the middle where it's not the worst it's ever been, it's not the greatest it's ever been, it's somewhere in the middle. But a lot of people get wrapped up in that. And so a lot of people act like we're just in the worst situation we could ever be. But again, the side of the worst situation we could ever be is not 4% unemployment. It's not 3% GDP growth, you know? And so, I don't know. I think you got to take everything into context of an election year this year. So it's an election year. You got to look at that context and understand that context, because that means people are going to be trying to pull consumers in all these different directions and opinions. And so just understand it. It also means that the stock market generally is going to go up during election years. The S&P, the NASDAQ historically have done very well. And this is a big election, I think. It's a big election. Every election's big, of course, but, you know, it'll move markets. It'll move markets. I'm not going to cover any of it. I'm pretty neutral on all of it. And I know I've said that, and people have actually asked me to cover it more because I try to be unbiased and objective. But I really just don't want to get wrapped up in that. I don't want to cover them. I don't want to even talk about them, really. I'm just going to... I don't even watch them most of the time. I'll watch cliff notes of them after the fact. Like, the whole thing is just... Yeah. My favorite thing to debate and argue about. Yeah, it's all good. Fully respect your basis point theory. He too against rate cuts. Yeah, well, our election, Blaze, is bigger for the world than the Canadian elections, for sure. Where's the... Let me see where the yen is at. What is the... what's the yen symbol? I think it's JC, right? Or it's CJ. Is it /CJ? What is it? What is it? What is the symbol for the Japanese yen? JPY? Is it? No, that's not it. No. There's a symbol for it. I can't remember what it is. I think it's JC. There's like what is the yen symbol? I always forget it. AI to the rescue. $6J is what it is. Thank you, David. That's what it is. It's $6J. Here's the Japanese yen, and the higher this is, the worse it is for investors. And that's why this is another reason the market's dipping so much, is because of this aspect of it. You know, the yen carry trade, the Japanese yen is such a factor of markets because the more expensive it is to get leverage using the yen, the weaker the stock market is in general, right? That's usually the normal correlation, is that as the yen pushes up and the interest rate behind the yen gets worse, people start unloading U.S. positions. And that's what happened with the yen carry trade, is that investors like to use the yen to buy up U.S. assets. And when the Bank of Japan came out overwhelmingly hawkish and kind of shocked people with how hawkish, meaning how restrictive monetary policy, how high they were pushing their interest rates, people panicked and started unloading U.S. positions that were backed, or that were traded, or that were bought by the leverage they got from the Japanese yen. Yeah. So again, what we've seen here, if you want to look at the correlation, it's very clear, it's very obvious regarding the yen. Just this year, you know, let's see when this drama started. So to put this into perspective, right? So here is when this moment on the chart and this moment on the chart are basically the same moment. Right, and so what does that mean? That means markets are going down as the Japanese yen is going up, and it's not a coincidence that it's like that. Sometimes they don't have a direct cause and effect, but a stronger yen indicates that investors are moving away from stocks and into safer ones like the yen, and there's a lot of stuff behind it. Tesla's starting to push up. So Tesla is starting to increase here. Tesla at 220s. SPY up pretty big too. Gold does not know how to go down. Yeah, but I mean, again, gold is mostly sideways. So, like, if we look at gold here, brother, gold's breaking highs the day. But if we look at like a long-term chart for gold, right? Like we put up a yearly chart. Gold has basically been sideways for a month straight. Like, look. That's gold's chart over the last month. And again, the problem with gold breaking highs is that it tricks a lot of people into buying it at the worst time. And so what you'll notice, and I say this every day, and hopefully some people understand it, but gold can upward trend for a long time, right? When it starts to downtrend, it can downtrend for a long time as well, right? And so what you need to be careful of with gold, I think gold is fine to ride up because it can long trend for a long time. When it starts to turn And when it breaks milestone levels, you have to be disciplined enough to, recognize that. But if you're holding it long term, it doesn't matter either way. Just the time that I'm buying gold is not as it's breaking highs over and over again. But I guess if you DCA, it's probably okay. It just depends. I'm not telling you what to do. Not an investment professional. Not liable if you lose money. All that stuff. Figure out how you want to trade yourself. But yeah. Hey, what's up, Saeed? All right, so we're going to be day trading today. Alright. Let me get rid of this. Yeah, so the Apple event didn't really do anything too crazy to Apple stock. It's not like it pumped up crazy big or anything like that. But yeah. And then Tesla's pretty volatile. Alright, so sorry, I had to update something. So Nvidia's been in this little bitty range, though. This is a tiny little range for Nvidia. Apple stopped innovating. Yeah, people are kind of upset about Apple and, not really innovation. Not really innovating is what I should say. So people are upset with Apple for, again, just not really innovating like they want them to. Yeah, I've always been a Samsung person. Like, I've always been a Samsung user. Siri merger. I'm pretty bearish in Siri overall, as should most people. Again, guys, I'm going to go through this like logic again. So every company you invest in, right, despite news, despite price, despite hype, despite all these things, you have to do the same thought experiment every time you buy something long term. Anytime you buy up anything long term, you got to do the same thought experiment. What is that thought experiment? You need to question what the long-term future of their business looks like if you're investing in something. And I mean buying and holding for years. What does their future look like? All right. Now, there's a couple companies that I have been very outspoken about in this regard. And I've been correct on them. And the way I've been able to accurately predict this is because it's very clear. Okay. It's been very clear what's going to happen to these companies. Right, it's been very clear. And what's going to happen is that they're going to go obsolete. You got to look at what the future looks like. Examples of these companies, I'll give you some examples. And again, I might ruffle some feathers with some of these companies that I mentioned, but that's okay. Here, we'll put it up right here. Here, I gotta go do something real quick. I'll be right back. Alright, so I had to go do something for the wife. Yeah, so again, I might ruffle some feathers with some of these companies that I mentioned, but that's alright. So, again, there's a couple companies that I've mentioned for years that are obviously going obsolete, right? They're obviously either overhyped or their future business model was done, right? One of these companies that recently went bankrupt, and I was talking about it for months and months preceding this, right? For really over a year, was Dish. Dish on Demand, now bankrupt, now doesn't exist anymore. And again, the satellite industry, some of these are very obvious. It's self-evident, right? Satellite TV companies are obsolete. Why? Because streaming has taken over these companies. Like, streaming has made these companies worthless. Nobody wants to strap a satellite dish to their home anymore so they can watch cable. You don't need to do that anymore. You know, nobody does that. The percentage of people that need to do that is so low, no business is going to stand alone on that. And so it was very obvious Dish was going to fail. Look at Nvda break highs over 108. Another example of this that might ruffle some feathers is Roku, right? Roku. I have been calling this one weak for years, and it has dropped from $500 a share to $65 a share. Why do I think this one's weak? Now, Roku, you might look at Roku and be like, oh, Roku's big, it's powerful, it's got all this different stuff, right? When I look at Roku and I look deep into the future, what do I think about it? I think Roku is mostly a hardware company that now transitioned to software. And the thing about software is that other businesses can create their own versions of it very, very easily now, right? Like, you don't need to buy a Roku device anymore, and nobody does, right? They have a Roku app now. And again, what you're going to see happen, and what has been happening, is that TV companies produce their own versions of Roku software. Why would they use Roku as a middleman where they can create their own version of it and basically cut out Roku completely? You know, they could probably create their own version of that software for what, like $50K? Completely cut out Roku, take the data themselves that they need. And that's bad for Roku moving forward. Nobody's going to really need to use it anymore. Like, technology, again, has evolved past needing hardware, like Roku. You just don't need it anymore. It's mostly software driven now, and that's bad news for Roku. And again, over this period of time, Roku has gone from $500 a share down to $50. There's a lot of examples of companies like this. Some of them are simply just overhyped, right? Like, some of these companies are just overhyped. Examples of that are like Beyond Meat, BYND, a fake meat company. This one's very easy to tell. When you say, hey, what does this fake meat company look like? I've been saying this since it was back here at $100 a share. When you look at this, you say, who buys this? Nobody buys this, right? Vegans are incredibly health conscious. They're not going to experiment with their body on lab grown meat. Nobody's going to buy this ever. The other one is Peloton, a freaking virtual reality bicycle company that got big during the pandemic. Again, nobody is going to use Peloton after a certain point. I did a famous poll. Would you rather buy Peloton bicycle for $3K or an actual bicycle? And everybody chose the actual bicycle, thus showing how weak this is going to be. And again, I've brought up these examples a lot before, right? These examples are very common for me to bring up. But the point I'm trying to make here is that you can find companies like this. And if you are going to short stuff, these are the companies you do it on, right? If you want to take advantage of downfall of something, instead of trying to short the tops of the S&P, the NASDAQ, the Dow, you know, I'm not telling you to short anything. I'm not an investment professional. I'm one of the top 3 worst shorters of all time. Don't copy me. Don't sue me. I'm not liable. If you lose money, always make your own assessment. Trade responsibly. I'm not an investment professional. But with that said, if you're going to short, why would you ever short the S&P, one of the strongest index funds in the world? You can find these companies like this that are overhyped, that are young, right? The thing about a lot of these companies is they're young and they're priced way too high. And you can find them. Maybe not anymore. A lot of these have corrected since I've been talking about them, but there's still a handful of companies out there like this that you can just benefit from. And this is what short reports like Hindenburg do. And sometimes they're wrong. I think they might be wrong about Supermicro semiconductors, and I think sometimes they pick strong stocks that are a little too strong. But you can find overhyped companies like this and benefit from weakness. And so, again, I'm sure I'm ruffling some feathers here, but again, I don't know what's overhyped up now. You're going to have to do your own assessment like I just did of these companies. What companies are obsolete because of technology? That's the question you want to ask yourself. WKHS. It's been so long since I've seen that company, man. I remember it, though. Nah, people still buy Dell a ton. Zoom, maybe. Zoom, definitely. Zoom is one of those companies that, again, another company that got really big during the pandemic that not a lot of people use anymore, that very quickly, like, Zoom charged monthly subscriptions for things. And within a few years, we had a software boom in conferencing. And so everybody, Google, Discord, there's all these different conferencing apps now that do it for free. So you don't have to go to Zoom to do it. You can do it for free elsewhere. People also left remote schooling. They left. Now, you still use Zoom a ton for work, though. The only hiccup there is that the only benefit to Zoom, the only reason Zoom might not fall in this category is because Zoom, people still use Zoom a ton. The transition from commercial properties to remote work is still happening. And so over time, the problem is that more and more people are going to start working from home. And a lot of them have used Zoom as the standard conferencing app that they use for work, because you can get so many different people in there watching something on Zoom. And so I still think there's a pretty good use case for Zoom. But it's subjective. Like, the outlook is subjective. I mean, so anything, who knows? What's the name of your strategy? Pick out crappy stocks, I think, is a good name for it. Top 3 names, they would say. The crap stock diary, maybe. I don't know, something like that. Yeah, again, I don't know what stocks are good or bad right now. I really don't. Again, this is something that y'all are going to have to figure out. I have no idea, right? What I'm saying is I was right about Peloton. I was right about Beyond Meat. I was right about a lot of these companies because they were obvious. Dish. Like, again, I'll show you. Like, look. So before Dish went out of business, I was very outspoken about it. So this was 2 years ago. Again, 2 years ago, I posted this. And this is when Dish was still public, before it went bankrupt. I think that tech has evolved to a point where we don't need to slap a big satellite dish on our home anymore. Streaming apps like Netflix, Hulu, Fubo replace Dish and are cheaper, having no contract to add. Satellite TV will fade almost completely out soon, in my opinion. Right? So, I'm not just making up stuff. Like, I was on point with this. And then Dish went bankrupt, a year plus later. And so, and again, there's companies like this out there. You just got to do your own research regarding them and find them. Those are the companies you short, right? Not Apple, freaking Amazon. Those are incredibly risky. You're betting against the strongest companies in the world. Yeah, the Feather Ruffle Diary. Yeah. Yeah. Spotify is still highly used. Spotify is taking over music. So I'm not bearish on Spotify. Not any economic data. Yeah, Dollar General and Dollar Tree. I agree. Those are weak. I think those will eventually fail. I might be wrong. Don't copy me. Not an investment professional. You're liable for your own stuff. But I agree. I think they'll eventually fail. I think that's an inevitability at this point in time, that those are eventually going to fail. And again, we are going to be day trading on Top Step X today. We are going to be day trading on Top Step X. Again, and TopStep X is just a powerful platform. It really genuinely is. Like yesterday we made some money. Let me see what we're up. Yeah, so we are up really nicely. We're up a couple hundred in this account already. Taking it slow, building up. I'm going to build up a cushion of at least like 1 to 2K. And again, the beautiful part about TopStep is that there's no trailing drawdown from my understanding. And if on TopStep X, there's freaking 0 commissions. That is a powerful thing. A lot of people underestimate how edge heavy that is. Why is that edge heavy? Because the biggest risk of these funded accounts is getting eliminated from trading large in something like the NASDAQ, right? The NASDAQ, I can buy one contract and it can move hundreds, if not thousands of dollars within 30 seconds. And I can completely destroy any account that I trade on it. It's hard to manage risk. The powerful thing about TopStep X is that I can take micro contracts, which basically 10x's my size down. I can trade very small size on TopStep X, and I can take small positions where I'm making 12, 30, $15 a trade, and I'm keeping a large majority of that profit because the commission is non-existent, and there's only 74 cents a trade in fees with the micro NASDAQ and the micro E-mini. There's only 74 cents a trade. And so I can scalp like that, very small size, grow profits with the most pronounced edge possible in these funded account programs. And again, TopStep is a funded account program in futures. They give you a demo, test your skill with it. If you pass the test, they fund you. And most day traders lose. And so this is a powerful thing where if you want to limit your risk, instead of risking 5-6 grand of your own money, 10 grand, 2 grand, you can limit your risk. Try one of these. It's only $49. If you're good enough to make 3K in profit on the demo they give you, which is a 50K demo, if you're good enough to make 3K without losing 2K first and following their rules and conditions, they fund you 50K, 90% split. So you're keeping most of your profit once you're funded anyway. As long as you follow their rules, you're keeping 90%. It's similar to putting the money up yourself. But if you lose, you only lose what you pay for it, which in this case is $49 a month. And you can always reset it again. Again, they're an affiliate or sponsor of mine. They pay me money. I'm biased because of it, which I think should be understandable. But I genuinely think this is good for traders, and it's something that I wish I would have had when I got started trading, in all honesty. And so again, check it out. Again, if you want the big edge that I'm talking about, TopStep X is the platform you want to use, essentially. Yeah, and again, the problem with the Dollar Tree and the problem with dollar stores in general is the transition away from retail brick and mortar to mail order products, right? People don't go to the stores much anymore. Like, there's still some people that do, but it's definitely not as much as it is. The whole trend in business right now is that people are migrating away from the bad margin business of brick and mortar in all industries. Right, so people are saying, why? Because risk is so much higher. Like commercial leases, if you've ever tried to rent a commercial lease, there for years you're locked into a lease, right? So imagine as like most people are used to renting a property, right? Renting a home or renting an apartment or whatever, and usually those leases can vary from 6 months to a year. Now imagine a business as unpredictable, as variance heavy as a brick and mortar retail business, and imagine that most of them fail within 6 months, but the lease on those businesses is 3 years, usually minimum, 2 to 3 years minimum. And so you're locked into that lease for years in that business a lot of the time. And so what that means is that a lot of people are not trusting those businesses anymore. They're not willing to invest tens of thousands of dollars to get that startup done, because the likelihood of it failing is super high. And again, what this leads to is everybody getting stuff online, because businesses are starting to innovate online. Amazon obviously is the big one over the last few decades, but it's so efficient now that you don't need to go to these stores as much anymore. You just don't. You don't need to go to a lot of these stores anymore. And so over time, that's going to become more and more pronounced, and eventually Dollar General and Dollar Tree are going to fail, right? I think this is inevitable. I think they're going to fail eventually. The only people still holding on, again, are the older generations that are used to using them. My grandmother used to take me to Dollar Tree. Like, rest in peace to my, in Louisiana, we call our grandmothers Mimi a lot of the time. So rest in peace to my Mimi. But, unfortunately, those type of stores are on their way out. And I think that's very clear. But they might have some volatility leading up to it. You might have spikes, you might have decreases. I don't know. I don't know how long it takes. It might take a few years for these businesses to completely fail. It might take a decade plus. I don't know. But I think it's inevitable. Eventually it's going to happen. No, I don't think anything drops. So we got, yeah, nothing really drops today. So we don't really have any, yeah, theft's a big thing too, 100%. Shopify is a little bit different. Like I trust Spotify much more than I trust Shopify. Those are two different things. If you don't, Shopify, like, it's hard to figure out because, the transition into tech is causing drop shippers to make some money. But the drop shipping industry is incredibly saturated, and I think Shopify feeds off of the drop shippers. And drop shipping is one of those markets where people make more money selling courses on how to drop ship than they do from actually drop shipping, right? And so the younger generations are just fed these nonsense courses that everybody's trying to talk them into buying on drop shipping. And the amount of people that actually make money drop shipping is much, much lower, right? It's kind of like Amazon FBA, right? Amazon FBA kind of ingrains into these young people, oh, Amazon FBA, Amazon FBA, Amazon FBA. But the Amazon FBA businesses are super low margin. They're super bad margin. If you look on websites that sell online businesses like Flippa.com, a lot of them are Amazon FBA businesses. And if you look at the trends in their profit, the trends in their profit over time look like this, right? They're very, very bad in terms of margins, in terms of reliability. And the example I always use for this is fidget spinners is the best way for people to understand what I'm trying to say here. So the problem with Amazon FBA is that most people are selling stuff from overseas. They're buying it on websites like Alibaba. They're getting it wholesale. So they might be buying something. Let's call it a fidget spinner at the time. When fidget spinners first took off, they were selling them for like $40 or $50 a piece at the good stores, like the high quality ones. And so a bunch of retailers on Amazon bought a bunch of fidget spinners and started listing them on Amazon for cheap. And they bought them in bulk. But over time, within 6 months, gas stations were selling fidget spinners for a couple bucks each. And so all these sellers that bought all these fidget spinners wholesale lost tons of money. And that's the nature of Amazon FBA as a whole, right? Is like, you might, even if you get a product that hits, it's not going to last. And it's a super hard margin businesses. Like, basically Amazon FBA businesses are spending like $10K a month to maybe make $1,000 or $2,000 a month. So their profit margin is 10 to 20%. And that's not a good margin. And so you see them throw up all these sales and they use it to justify, they have like 100,000 in sales, right? And then they're selling people on making $100,000 a year when really they're not making $100,000 a year. They're making 10 to 20K a year, which is nothing. It's under minimum wage if you count how much time they're spending on it. But they're using their sales. They're like, oh, I got 100K in sales this year. But that's not their actual profit. Their profit margins are much worse. And so those businesses are not sustainable. And most of the time people make money. Unless you're a big company doing it in a lot of different facets, those businesses are not going to succeed most of the time. And so, again, going back to Shopify, people make more money selling courses on how to drop ship or how to do Amazon FBA than they do from actually doing it. And I think Shopify benefits from that, with basically everybody trying to sell a course on how to drop ship. Shopify makes money from it because they're using Shopify to do the drop shipping. But I think eventually it's going to run out of steam, and that might be bad for Shopify. Again, it might not matter though, because you still have successful vendors on Shopify too. And so it's nuanced. It's not as easy to say yes or no. But I'm avoiding buying the stock because of it. That's just my own stance. Again, I might be wildly wrong. Maybe Shopify benefits massively from it. I don't trust it enough to want to put my dollars in it. And again, that's just me. Again, I might be wrong. Like, don't get mad. No, I don't sell on Amazon. Again, the margins would be too bad. Right. Dollar stores may be around, but they're no longer an investment opportunity. Exactly. That's exactly right, essentially. Yeah, Tractor Supply, good business. You know. Yeah. Right, 100%, Callie. And that's the nature of it, right? But again, people advertise it as 100K businesses, right? 100K in sales, guys, is not 100K net. You know, like you got to look at margins. And again, I'm telling you, on Amazon FBA, the margins maybe 10 to 20%, maybe, which means that for every 100,000 in sales, you might make 10 to 20K minus taxes. So you're not making anywhere close to 100K. But again, everybody gets sold on it because it's easy to sell people courses, and you got gurus. It's similar to like trading. You got gurus that sprout up and act like they're just freaking business experts when really they have no idea about business. They're just kind of hoping that somebody's dumb enough to believe them and pay them money and be their apprentice, when really they're just profiting from them. You know, and then they turn into gurus and they start selling Amazon FBA courses, and like it causes this snowball effect of it. You see it a lot in trading, right? And it's one of the reasons with trading I've always tried to tell people, top 3 worst trader of all time, don't copy me, because if I'm gonna make money from this, I'd rather tell people the truth, and I think that makes the most sense for me. Well, no, you can make money on eBay for sure. You just got to have your own niche. You got to have a source. You have to have good margins. And you have to be doing something unique and set yourself apart from other sellers, 100%. It's possible to still you can make millions from eBay. You just got to have a good business. And the business needs to be sustainable outside of it too, you know. Not necessarily, but I would recommend to diversify well enough so you don't need any one source. Yeah, drop shipping, you're trying to make money from basically nothing. And so most people are savvy of it, and they could buy the thing on Amazon for closer to true cost than buying it from a drop shipper. And so most people are very savvy in that, like, they'll see something advertised to them on social media. If they like the thing and they're smart enough, instead of buying it from whoever's advertising it to them, they will instead go to Amazon, type in the product, find it for closer to true cost, buy it that way, and then get it sent to their home faster than it ever would. The problem with drop shipping for me, even if I wouldn't mind paying the extra price for it if it's something hard to find, the problem is that anytime I've bought something from an ad like that, it takes like a straight month to get. Because again, the people selling it are middlemen, and so they got to go buy the product, and then it just takes so long, it's not worth it. I'd rather just buy it directly from Amazon, whatever it is. Oh, eBay's fees, yeah. I mean, that's thoughts on Home Depot and Lowe's. I think Home Depot and Lowe's are safe, personally. So I think Home Depot and Lowe's are safe. And the reason I think they're safe is because while they are brick and mortar retail technically, people have to go to those stores. They're not going to be able to order like wood and stuff like that off of Amazon in the same way that you can order other sector stuff, right? So there's still an innate need to go to Home Depot. They sell plants, you know, they sell wood, they sell stuff that you need same day, that people can go to the store, pick up what they need and leave. And so the convenience factor of going to Home Depot is still much, much more convenient than shipping anything, than shipping most of the things that you would sell on Home Depot to your house. So basically, I think mail order shipping in retail is going to completely render a lot of businesses obsolete, but I think construction is different, and I think home improvement is different. I think plants are different. I think wood is different, and it's not going to be something that you're going to be able to do mail order shipping as easy, at least as easy. You might still have something that sprouts up that tries to, but it's going to be a lot less vulnerable to it over time. All right, guys, yeah, we got a minute and a half. Yeah, I mean, so somebody's asking how I make money. So I do a lot of different stuff. This channel certainly makes money, though. But over time, I've done a lot of different stuffs and been able to save really well and just build up a solid network for myself. And this channel certainly makes money, you know. But regardless, I'd be fine either way. And again, I got a lot of different income sources as well. Yeah, we got GameStop earnings today. GameStop earnings. Yeah, Home Depot is super needed. People have to go there. Again, it's super expensive to ship stuff, and especially like wood and construction stuff. It's not something that people necessarily want to get shipped to them. They need it that day. I used to do landscaping. We would go to the store the same day, pick it up, and go get the job done. You don't have time to wait to get some of that stuff done. And so they're resilient, I guess is the point, in my opinion. I might be wrong. Maybe they crash. I don't know. But in my opinion, they're resilient. We got 10 seconds, guys. 10 seconds. No trades today yet. We'll see what this looks like. All right, I'm also going to throw it in sub-only mode. I don't think I've done this today yet. So, again, announce yourself. Show us you're subscribed. We appreciate the love. Thanks so much. Again, everything we do there is free. I don't even claim to be a good trader. Hit the subscribe button. Hit the notification bell, chat. We appreciate it. Tesla down at the opening bell, dipping some. Nvidia starting to bounce at the 200 EMA volume weighted average price level. All right. Man, my coffee is strong today, dude. I can taste it. It's super bitter. Tesla just rebounded all the way back up. It's over 221s. It's kind of dragging everything else up with it. Look at that, 221, 50s. Look at Tesla rip. Look at Nvidia rip. Yeah, so look at Nvidia shoot up, guys. Wow, so Nvidia up to 109 plus at the opening bell. Tesla up to all the way at 222s. Super big move. I'm going to short into this. Definitely pretty close to the opening bell here. And kind of a risky maneuvering trade here. We got two contracts. All right, we took half off. All right, so we just got out. We just made a little $20 gain at the opening bell. A little 20 bucks. Shorting the top here. Yeah, I'm going to do GameStop earnings. I don't think they're doing an earnings call, though, but we'll do GameStop earnings. Tesla's still bouncing here. Big decrease. I was going to buy this. All right, we got two contracts. We got a bad fill there, but that's okay. Yeah, I'm gonna cut that. So we're basically flat since the opening bell. I might buy it back up on a dip though. Did I get 2? I wanted 2 contracts. There we go. And we'll take 3. Taking a little risk this morning here for sure. But now we're flat. There we go. With bad fill on the rest. We popped up there really quick and then we didn't hold, unfortunately. Yeah, this turned quickly on us, so we're gonna have to wait. Let's see what we got. 20. So we're down probably like 30 bucks. All right, I'm gonna buy this now. The reason I'm buying this is because we're hitting the VWAP on the SPY, and we're also running into some support. All right, took half off. Bad fill. We took a little piece off. Another bad fill here. I'm gonna have to work on fills. Maybe take some longer term trades. I got at least a good fill there. Alright, so we got out. So we're up about, we're probably pretty flat on the day. Let me see what we're at. I thought we might bounce on the VWAP and we did. Yeah, we're down 30 bucks today net. So 30 bucks. So basically pretty flat. We'll see if we can get into it. Buying this again. Flat on this one. Right, we got 2 contracts. Try to be patient with this trade. Alright, we're gonna have to cut it. We're just getting caught in too much volatility. We're probably down 60, 70 bucks right now. Just a big turnaround in Nvidia. Nvidia pumped up big at the open. Tesla's still breaking highs though. But what I'm worried about is choppiness. Where's GameStop at? GameStop's down too at the opening bell. Yeah, look at this turn on the red end of it. I'm gonna take 1 contract here. But we're not gonna add to this one now. I've tried to play the bottom too much. We're still over the 200 EMA, which is a little bit optimistic, but yeah, I gotta cut it, so. It's a bearish sign right now, but I'm gonna wait and just kind of let things play out. I'm probably down like 80 bucks since I started the day. And again, yesterday we made like a good bit. We're still green on the account, and so we're still net profitable, but not what I necessarily wanted. I don't know if I want to short into this. I guess I'll try pivoting to a short base position, but I'm basically getting chopped out both directions today. Yeah. I'm gonna cut this and then I'm just gonna wait. Or at least I'm cutting 1 contract there and then I'm just gonna wait. Our losses on the day are still pretty small, but like you get kind of like a flow state of like good and bad predictions, and I don't know if my calls today are very good, which some days are just not good. Tesla has been running up some, which is interesting. I'm gonna have to add something here too. I'm just glad I wasn't trading regular micros or regular E-mini today. Alright, so we just made something back there. We got the previous closing price up here at 106.50. Yeah, I probably overtraded a little bit too much. Usually I can get into a good little flow 5 to 10 minutes after the open. But again, every day is not perfect. Like, you're going to have some good days and some bad days. And so, it's all good. Like I said, I'm not going to be perfect. And that's all right. Yeah, Tesla turning all the way back down to 220s here. But GameStop's trying to bounce back up. GameStop at 24.20s. Again, the good news is that I didn't trade a ton. I kept my prices pretty small. And so again, if you want to check out TopStep, no commissions on TopStep X. Again, one of the most powerful things. Even out of all my trades today, I probably got into what, like 20 trades, 15 trades just now. I probably paid $10 in fees from those 20 trades, and there's no commissions, right? So again, if you want to try a funded account program, this is literally one of the single best edges in trading funded accounts, because there's no commissions, very small amount of fees. I can trade micros and get in and out like I do, only running up a super small amount of fees, no commissions. And again, TopStep gives you a demo. They test your skill with it. If you pass the test, they fund you. If you fail, you only lose what you pay for it. In this case, it's only $49. If you look at the base one, it's only $49. You got to make $3K in profit without losing $2K. So it's a 2 to 3 ratio, very reasonable ratio. And this is a $50K funded account that you see me trading on, a $50K Express funded account. So again, it's super useful. You can also get a large account if you want. It's only $150 to try it. If you lose, $150 a month to try it. If you lose, that's the max you're gonna lose. If you don't pass it, which is just a great way to limit your risk. And most day traders lose, and so it's a lot cheaper to try this out and lose than it is to put up 5K and lose that. And so again, if you want to check it out, here's the link. Appreciate the love. They are an affiliated or sponsor of mine. Tomorrow is the big day though with CPI. CPI data drops tomorrow. That's the biggest day of the week by far is tomorrow. We'll have thousands of people here. We'll have over 5,000 people probably tomorrow. So I'm excited. And if you want to check out TopStep, there's the link. Remember, they're an affiliate of mine. They pay me money. I'm biased. I understand CFTC 4.41, hypothetical or simulated performance, have limitations, all that good stuff. I'm going to buy one of these real quick and then maybe get into a couple positions here. I don't mind losing a couple hundred on the day. My max loss is a couple $100. So we're going to buy this dip, take a little piece off there, see if we can get a good little scalp there. So, all right, we just made another $20. So we made $50 over the last 2 trades. Let me see what I'm down here. Okay, we're down less than $100. It's a small day so far. We'll see if we can run it up into something. I like that dip buy. I saw Nvda trying to fight its way back over the 200 EMA, but I think I'm longer term short biased here because I think we might reject the VWAP and come back down. But I might be wrong. Don't copy me. Hey, thanks, Tony. Yeah, CPI tomorrow is huge. Guys, y'all be careful. Yeah, so there's the rejection on Nvidia at the VWAP. There's the drops. Again, GameStop up to 24.20s. GameStop fighting its way back. Hello? Okay. Hey, is everything up in our... Alright, I'm gonna go check it real quick. Alright, well here, let me go. I'll walk through it. Alright, love you, bye. I'll be right back, guys. I'll be right back. All right, sorry guys. Yeah, we got people working here, so I don't know. I think we might get a bounce now. My sentiment's kind of changed. I think we might see if we can catch it. Sorry, my dogs are going crazy. Yeah, sorry, my dogs are screaming and yelling, and we got contractors here, so they're working. But yeah, so we got into that nice little bounce. We're pretty close to flat on the day now. Again, I told you guys my trend bias had changed. If you might be asking me, like, what made my trend bias change? What made it change is, like, you start to see a slowdown. Number one, you got this previous closing price right here, right? This is a big support level. And so the reason it started to change is, number one, it's the day before CPI. We might have choppiness. Number two is that we started to put a lot of big down wicks here. And these big down wicks start to indicate what? They start to indicate buying pressure, right? Because for a candle to go down and then get pushed up really quickly, it forms these candle wicks like you can see. And that signals buying pressure. So it was a mix of like, hey, we're at the bottom of these ranges. I can see all this downward pressure. And we've got big support underneath us. In Nvda signaling a bounce back. A lot of stuff started to slow down towards these levels, and so again, that's why we profited on the upside, and that's why we were able to basically say, hey, I think we're gonna bounce a little bit. So hope that makes sense. With that said though, guys, I got contractors here today, unfortunately, so we got people here working. So yeah, we got people here working, people here building stuff. We're gonna try to trade a couple more seconds here as we trend higher. I might start shorting it too if we rise up really high here. Oh my gosh, I accidentally, it looks like I made a little bit. There we go. All right, so we just made another 25 bucks. We're pretty close to flat. And again, right now we're playing this range here. So you got this little range. Let me draw it better. We got this little range. We get to the top of it, we kind of short, write it down, get to the bottom, buy it, write it up, is what we've been doing. Tesla also starting to break highs though, so we can buy this up. There we go. I'm pretty close to flat, and this is why there's a high edge on Top Step, because like look at these trades, guys. Like look at this. $30, $3, $15, $18, $11, $2, $14, $3.50, $11, $4. I'm able to do this with very minimal fees, probably less than $10 in fees for all this. And I'm able to scalp these small little gains and get back from what was a, I was down a couple $100, I think, from just bad trading at the open. Now I'm basically flat. So again, we'll see. But again, if you want to check out Top Step was one of the best options. Again, if you want to get funded and stay funded, I genuinely think Top Step's one of the best options. They give you a demo, 50K demo. If you can make 3K without losing 2K on it, they fund you. If you fail to do that, you only lose what you pay for it. And you probably would lose more if you put the money up yourself. And then once you're funded, you get a 90% split, and there's literally no commissions on Top Step X. If you use Top Step X specifically, you got to use Top Step X. And so again, I think that's the best deal in funding right now. Best deal in funding. check it out. I'll put the link in the description as well as right here. I love you all, guys. Y'all be safe. Yeah, we got a storm headed towards us. We got contractors here. We got a lot of stuff. And so y'all be good in these markets. I love you all. Y'all have a great day. And I'll see you guys later. Y'all be good. Again, they're an affiliate of mine, just to clarify. But yeah, love you all. Y'all have a great day. CPI day tomorrow, guys. Massive day in the markets. Absolutely huge day in markets. So be ready. Massive, massive, massive day tomorrow. Be here at 8:30, guys. That's when CPI inflation data comes out. It's expected at 2.6%. One of the lowest inflation readings is what's expected that we've had in a while. And so it's a massive day tomorrow. Be here for CPI. I'll see you guys later.